Okay. Good afternoon, everybody. Welcome to part one of our two-part webinar series called DI University, presented by Regis Financial Partners and Mass Mutual. I'm Josh Pelletier, Director of Marketing for Regis. I'm joined by Vinny Siha, Managing Director for Disability Insurance with Mass Mutual. We decided to put these two webinars together for the everyday advisor or any insurance professional that's looking to gain additional knowledge about disability insurance, and any advisor that wants to learn how to expand their practice into the disability space. So with that, Vinny, I'll let you introduce yourself. If you don't mind, talk about a little bit about the structure of what we're going to talk about part one, part two, and then just get right into part one. So go ahead.
Awesome. Thank you, Josh. First of all, I just want to say thank you to Stephanie and Regis Financial Partners in general. Really appreciate the opportunity to chat with everyone today. Again, my name is Vinny Siha. I'm a Disability Regional Director for Mass Mutual. This is called DI University. So the basic thought process here is we're going to bring you from maybe a little bit more basic understanding of disability to something that's much more proficient. I want you to be comfortable having a conversation with a client, bringing up disability, and at the same time answering any questions that may come back to you during any meeting that you were to have with a client. We'll talk about different markets and how people are being successful. Of course, language, which is, I think, so important. I'll give you some of the more basic questions that a client may ask you, and then I'll give you some really good responses that you can give back to that client that will not elicit a lot of additional questions, so you can be confident in bringing up the conversation. So that's kind of the basic gist of what we're going to discuss is some roadblocks that you may run into, and then how to overcome them, and then some really good language that you can use. I'm sure you've heard this first one, but there's actually a resource. If you reach out to your Regis Financial Partners partner, for lack of a better term, you have access to all of this marketing. But this is a structured marketing piece that will allow you to have a very basic disability conversation. I'll go through it pretty quickly because my assumption is you've probably heard this before at least once or twice, but I think this really puts numbers to it and does a really good job. So the most basic conversation, let's say you just want to understand how to bring up disability. What do I say? How do I say it? How do I show that disability insurance has value to my client? This is a great way to do it. It's a one-pager. It's a marketing piece. If you're holding meetings over Zoom just like this is a great marketing piece to be able to use because it's fillable. So I'll just give you an example of how you would actually present this to a client, and why and how it'll show the value of owning disability coverage. So really all we're doing in the disability space is everything is education. You don't sell disability insurance per se. You educate a client to the point of making a buying decision. That's one of the reasons why I really enjoy disability insurance. It's not a salesy conversation. Again, you're just educating. So helping a client understand what their most valuable financial asset is. So you could ask your client the basic questions that are on the screen here. Mr. and Mrs. Client, talk to me about the value of your home. And I'm just going to make up some numbers. Let's say they have a house worth $400,000. I think that's $400,000. Yes, $400,000. Their car, maybe they have a nice car, a Tesla Model S. Those are around $80,000 if they're a couple years old. An investment account, Mr. and Mrs. Klein, whoever you're having a conversation with, you may know that already. Let's say they have $750,000 in an investment account. But what we're doing is we're changing their perspective on what is most important in their financial future, in their financial lifestyle. So Mr. and Mrs. Client, you're right. Your home is very important. It's worth $400,000. Your car, I'm sure, is very important to you. It's worth $80,000. I said $8,000. But one thing that you're not thinking of is, and this is good language, is your ability to earn an income in the future. Your ability to earn an income in the future. All right, so this does the math for you. And again, I'll just make up some numbers here. Let's say your client's making $250,000 a year, and you're going to make an assumption for 3% annual increases, and they're 35 years old, and they're retiring at age 65. So you just fill it in. The future value, the future earnings potential for that person, you can see that the marketing piece does the math for you right down here, is almost $12 million. $12 million. So think about the perfect disability prospect is someone who's younger and who has a very high income. I've seen 25, 30, 45, $50 million in this little bubble down here before. The value, the future earnings potential that you have, generally speaking, is worth much more than the financial assets that you own today. What a disability or an income protection product does is it protects your ability to earn that income in the future, right? So you protect your home with homeowners insurance. Your home is worth, in this example, $400,000. You protect a car with auto insurance. In this example, it's worth $80,000. What are you doing to protect your most valuable asset? That is your ability to earn an income in the future. So I think if you compare the traditional financial assets to someone's ability to earn an income in the future, it kind of hits them in the gut a little bit. And I think it can push someone to action. So very good marketing piece. Again, please reach out to your Regis financial partner, and they'd be more than happy to provide it for you. So I'm going to jump into a couple of slides here. Again, we're going to focus in on language mostly. This is actually statistics. I'm not a really big statistics person, but I think this is important, especially because just generally in the financial services industry, disability insurance is not talked about as much as it should be. The likelihood of dying during your working years, the likelihood of dying, period, is 100%, but during your working years is 1 in 8. 1 in 8. The likelihood of being too sick or hurt to work or becoming disabled during your working years is 1 in 4. So to say that another way, you are twice as likely to become too sick or hurt to work than you are die during your working years. So I think the issue with that is life insurance is talked about a lot, which is great. It's extremely important. I own life insurance. I think everyone should own life insurance. But I think at the same time, concurrently, disability insurance should be a conversation that's had with those clients, just purely because of the statistics, the likelihood of something occurring. And please, if there's any questions, feel free to stop me. I would love it if I got some questions. This next one is a phenomenal way to start a disability conversation. So if you think, even personally, think about yourself, you hear the word disability, generally speaking, there's a lot of negative connotations that come up in someone's mind, right? So the first one is usually, it's not going to happen to me. It's not going to happen to me. I'm not going to become too sick or hurt to work. No way, not me, right? So how do we overcome that objection? That's very common. So I'll give you some language that you can use. I would highly recommend using this language with every single client, That first conversation around what your most valuable asset is and doing the math to determine your future earnings potential. And then also this second one, changing someone's perspective on where disabilities come from, overcoming the objection, it's not going to happen to me. So ask the question, Mr. and Mrs. Client, when you picture a disability, what comes to mind? Mr. and Mrs. Client, whoever you're talking to, when you picture a disability, what comes to mind? Generally speaking, you're going to get one of 3 answers. You're going to get hit by a bus, you're going to get car accident, or you're going to get wheelchair. One of those 3 answers. And the issue is, most of the general public out there, when they hear the word disability, they think of injury, an accident or injury, right? So follow the logic here for a second. If I hear the word disability and I think of car accident, or I think of wheelchair, or I think of hit by a bus, the next thing that comes to mind is, I know how to look both ways. I'm not going to get hit by a car. I'm a great driver. I'm not going to get into a car accident. It's not going to happen to me. I don't need the coverage. That's the basic logic, and that's what we're going to change with this conversation. So you ask the basic question, when you think of the word disability, what comes to mind? They'll probably tell you one of those 3 things. And again, all we're going to do is change someone's perspective. We're going to educate them on where disabilities come from. Mr. and Mrs. Client, you're right. You're probably a great driver. You're probably not going to get into a car accident, but that's not where disabilities come from. Around 90% of disabilities come from something other than an accident or an injury, and that is sickness. All right, so I'll show you the next slide here is going to show you some information on where disabilities come from. So don't use this term, the one in blue there, musculoskeletal and tissue disorders, unless you're talking to a doctor or a medical professional. But basically what that means is, I have a back issue, I have a shoulder issue, I have a neck issue, right? I have a slipped disc, I have arthritis in my hands. The next one down there is cancer. You could ask your client, do you know anyone who's ever had cancer? And I think sadly, every single person is going to say yes. Right? It is very common. Do you know anyone who's ever had a back injury, they're probably going to say yes. Pretty much everyone knows someone that's had an impairment like that. So what we're doing is we're changing their perspective. Most disabilities don't come from the bus or the car accident. Most disabilities come from something that's more common that they've seen in their life over and over many times. Things like cancer, the back, the neck, the shoulder, the slipped disc. Does that make sense? So two very basic conversations that I would bring up every single time you have a disability conversation. Overcoming objections before they even arise. Before they even arise. I think that's very effective. One other thing that I would mention is if you can get rid of the word disability out of your vocabulary, that's also very effective. I like to use the term income protection, because when you use the term income protection, you don't have the same negative connotations that exist when you hear the word disability insurance. Right? So that's another really effective way to bring up the conversation. So during our second part, we're probably going to get more into the group long-term disability conversation. I'm just going to go very high level here just to give you a general sense. This is also a very common conversation when you bring up disability insurance. I already have it through my employer. I'm all set. I already have it. I'm good to go. I'm all set. So I'll tell you a very quick little story. I presented on disability insurance for, I don't know, maybe 9 years or so, 9.5 years. And I have asked tens of thousands, literally tens of thousands of advisors. This is what we do for a living. Do you know how your own personal group long-term disability coverage works? Right? Do you know the definition of disability? Do you know what covered compensation is? Do you know a percentage of your income it covers? Does it cover your bonus? Does it cover your, do you have a good understanding of how your group coverage works? Tens of thousands of advisors. I've gotten one single person over the years who truly understood how their group long-term disability plan works. So I say that to say this: if we in our industry don't understand how our own personal group long-term disability plans work, do you think your clients do? Probably not. So again, back to what I was saying earlier, this is all about education. This entire conversation is all about education. Okay. So you get the standard rebuttal. I already have it through my employer. I'm all set. Very, very, very common. Here's some language that you can use with that client. That's number one. That's great that you work for a company that's fiscally or financially strong enough to be able to provide that benefit for you. Do you know how it works? When was the last time you reviewed it? Do you know how it works? When was the last time you reviewed it? They're never going to know how it works, and they may have looked at it once when they first started their job, right? So again, very soft entry point into the disability conversation. If you get your hands on the group long-term disability plan document, the legal document written up by an attorney, the actual group plan document, send it to your Regis financial partner who you're working with. We can review that and give you 5 or 6 bullet points on exactly how the group plan works and why it may make sense to own additional coverage over and above the group plan. So just to give you a sense, normally you don't replace a group plan, you're supplementing, you're adding over and above, over the top of a group long-term disability plan. So that's very, very high level. Just wanted to give you a little bit of language around that in case that conversation comes up at all. Why should you own additional coverage? I'll just give you a couple of really quick ones. Typically, the group plan does not cover incentive or bonus income. With a traditional disability policy, a fully underwritten traditional disability policy, you're going to be able to cover the incentive or bonus compensation, right? The employer controls the group plan. Right? On a GLTD plan through a big company like where I work, Mass Mutual, I have no say in which group plan they choose and whether they keep the group plan, they don't keep the group plan, they get rid of it. The employer controls it. With an individual policy, you as the client control it 100%, right? You have much more control over the group long-term disability plan. It's fully portable. An individual policy, if you were to purchase something over and above the group plan, you could take that with you forever. Whatever job you went to, you could take that with you forever. Usually group long-term disability plans, you'll lose them when you leave your employer. Just a couple of quick bullets to think about when it comes to group plans. All right, this is interesting. I would use this for more analytical clients. So say you're talking to a CPA, you're talking to an attorney, someone who's a mathematician, I don't know, someone who's much more analytical. I think this can be an effective way to show the value of owning disability coverage. Again, very, very important to understand these basics. So the first slide, option A, should you own disability coverage or should you self-insure? Right, that's really what we're comparing. Should you own disability coverage or should you self-insure? So let's look at the example here. We have a male age 30, and by the way, this is the marketing piece that you could, again, request from your Regis financial partner if you'd like as well. We have a male age 30, making $75,000 a year. They're saving 5% of their income a year. So 5% of the 75,000 is $3,750. And their monthly expenses are $4,000 a month. So that's their mortgage, that's putting food on the table, that's their car payment, that's all the basic living expenses. So if this individual, let's go down to the bottom, was hurt or sick, I'm going to not use the word disabled, was hurt or sick for 4 years, their $4,000 monthly expenses times 12 months in a year times 4 years is $192,000 of expenses over those 4 years. So how many years of savings would we wipe out if we were hurt or sick over a 4-year duration? Pretty much your entire working life in this example, right? So we're going to juxtapose pulling from your assets, pulling from your bank account to maintain your standard of living with owning disability coverage. That's kind of the purpose here. And I think this is a very conservative assumption as well. Think about being too sick or hurt to work. What happens to your expenses? They don't go down, right? You're going to the hospital, you're going to the doctor, you have copays, you have deductibles. Maybe you have to change what you're eating. It's a very expensive thing if anyone's ever had any serious medical impairments. So we're making the assumption the expenses stay the same, which is conservative. I think your expenses are probably going to increase. So the second example here is same person, male, 30 years old, making $75,000 a year. We're showing a 4A occupation class. The occupation class is a measurement of risk, right? The lower the risk, the higher the occupation class. So think about it. I'll give you a ridiculous example. If I'm a bomb technician, that's a very high risk. We won't even insure it, but that would mean that you would be lower in the occupation class threshold. If I was an attorney, I'm behind a desk all day on the phone, on a computer, that's a very low risk. I'm going to be much higher on the occupation class scale. So this is towards the top, not at the top, but towards the top. This is a decent occupation. 90-day wait, benefit period to age 65, and a $4,050 monthly benefit. So if they're too sick or hurt to work, we're going to pay $4,050 a month. So what this is showing, again, think of someone who's a mathematician or an attorney or someone who's very analytical. If you were to pay, we'll go to the bottom again. If you were to pay for this contract for 20 years, you're paid for this contract for 20 years, it's been enforced for 20 years, you've spent $17,340 on disability coverage. Now, what this is showing is the break even. How long would you have to be receiving benefits to get every dollar you ever put back into that contract? 4 months and 9 days. 4 months and 9 days. So remember, we're comparing self-insuring to owning disability coverage in the second example. There's a ton of leverage in these contracts. That's really what this is showing. It does not take a long time to get your money back, and then some if you were to need it. If you were to need it. Any questions on any of that? I know I'm talking kind of quickly. I want to make sure that I get through as much information as possible. If there's any questions, jump right in. So,
And I got one for you.
sure.
Or can you hear me now?
I can hear you now. Yep.
Cool. We have a lot of producers and insurance professionals that only sell life insurance.
Yep.
They want to sell DI. They're listening to this. They know about DI. Any tips on how to cross-sell when you're presenting a life insurance quote to somebody to spin the conversation into DI? I know you mentioned those really eye-opening statistics, but what else do we have?
That's a great question. So I would say asking the client why they're purchasing the life insurance, right? Starting there. Why are you purchasing the life insurance? Like, think about why you're making that decision to purchase life insurance. And generally, typically, they're purchasing the life insurance and they know and understand to replace all of their income that's not going to be there for their family in the future, right? That's typically why you're going to purchase, especially a large benefit amount or a large death benefit amount. You're replacing income in the future, right? Maybe you want to pay off your mortgage or your final expenses, but typically most of that is your human life value. So the disability space, you are literally doing the exact same thing. You're literally doing the exact same thing. So again, I think it just all comes down to education. Most clients don't even realize that this is even a product, that this is even an option, right? They don't even know. So just having the basic conversation about what disability insurance is, which is what we're going to go through right here, and then why it's important. It's replacing your income in the event you don't pass away, in the event that you're still around.
Yeah, just to bring it up is sometimes the easiest answer.
I agree. That's the hardest part, I think,
Yeah,
honestly.
very
That's
good.
the hardest part. So I think this is extremely important because I want you to leave here and be comfortable bringing up disability insurance. And in my experience, if I'm not comfortable bringing something up, I'm probably not going to bring it up. Right? I'm probably going to try to avoid it. So if I'm going to give you these 5 questions here, and these are very basic questions that a client would ask you during a disability conversation, and I'll give you the responses, the simple, easy responses that you can give to the client. And then if we have enough time, which I think we might, I'll give you the more technical response to it. So a client may ask you, how do I qualify for benefits? How do I qualify for benefits? So if you remember back to our original conversation at the beginning, it's protecting your ability to earn an income in the future, but what are the triggers? What are the triggers? And I think the easy response, the easy answer to that is it protects against your inability to do your job. It protects against your inability to do your job. Can you do your job? Yes or no? That's a very simple response. And again, I don't think it's going to elicit additional questions beyond that, right? You can understand you can't do your job, you get a benefit, right? Very simple, easy response there. How much in benefits will I receive? Again, very simple, easy, high level. There are more complexities to this, but very simple, easy, high level answer is typically a disability policy will cover around 60% of your income. Typically, a disability policy will cover around 60% of your income. When will I begin to receive benefits? I would say that's a la carte. Like you're at a nice restaurant, the Capitol Grill. It's a la carte. So you can choose. The vast majority of contracts in the market are sold with a 90-day wait. So that's the simple, easy answer is you can choose, but most clients choose a 90-day wait. Most clients choose a 90-day wait. So after 90 days, you're eligible to receive benefits. Very simple, easy response. Again, not going to elicit a lot of additional questions beyond that. How long will benefits last? That's a similar type story. It's up to you. You can make that determination. There's a bunch of different options, but most clients choose to age 65 or to age 70. Most clients choose to age 65 or to age 70. And then what if I return to work part-time? So this is the most complicated part of any disability policy, the partial disability benefits. What if I can go back to work some of the time, but not all the time? I can do some of the duties of my job, but not all the duties of my job. Right? This is the big math equation. But I think the easy, simple response to that is you'll probably get part of your disability benefit. So just break out in your mind 2 basic ways to become too sick or hurt to work. Totally disabled, you can't do your job at all. Completely laid up in the hospital. That makes sense conceptually, right? You're going to get the whole benefit amount. You get it all every single time. You're totally disabled, you get the full benefit. Partially disabled on the other end of the spectrum, you can do some of your job, but not all of your job. Part of your job, you're going to get part of your benefit, right? Very simple. Hopefully that makes sense. Just break out the 2 of those in your mind. So those are some basic questions that a client may ask you in a meeting. Hopefully those responses will make you feel a little bit more comfortable about bringing up the disability conversation. That's kind of the intent here. All right, so we have 3 or 4 minutes left. let me see what I think will make the most sense. Let's go through opportunities. What markets make a lot of sense in the disability space? So I'll give you a couple quick things here. Generally speaking, the younger someone is and the higher someone's income is, the better the disability opportunity. So if you have a hedge fund manager who's 32 years old making $1.7 million a year, that's a phenomenal disability opportunity, right? Or you have a surgeon who just got out of their fellowship and they're 34 years old and they're making $900,000 a year. It's a phenomenal disability opportunity. But where are folks successful? I would say medical and dental space is the low-hanging fruit in the disability market. Those folks actively seek out this sort of coverage, right? You're not going to have to convince a medical or dental professional to buy DI. It's more a conversation of which carrier do I go with? Who do I choose? Right, so that's definitely the low-hanging fruit. I think an idea there is if you go to a really large hospital, like I live in Connecticut, so Hartford Hospital is a very large hospital that's in my general area. If you look up smaller regional hospitals, that's where I think the opportunity is. If I went into Hartford Hospital as an advisor, you're going to find the number 1 Guardian person in there. You're going to find the number 3 Mass Mutual person in there. You're going to find the number 2 Principal person in there. There's an immense amount of competition in the larger hospitals. In the smaller regional hospitals, a surgeon's still making $900,000 a year, but you don't have the same level of competition. So I think there's a ton of opportunity in that space. So medical dental in the middle is a big one. Sales professionals, you remember the group long-term disability conversation earlier? Typically, usually a group plan only covers base salary. It does not cover incentive compensation. So a salesperson typically has a very large percentage of their overall total comp as incentive compensation. So usually they're drastically underinsured and they have no idea. They are very high income earning folks and they are drastically underinsured and they have no idea. Because again, nobody really truly understands how their group plan works. Right? Great market sales professionals. Even think about yourself as an advisor. Great opportunity to own coverage yourself. I would say honestly, to own or go through the process of owning disability insurance yourself first before even bringing it up with a client. That I think gives you a little bit more conviction. Executives, it says management up there. Executives are a huge market. You could do a carve out. The top, I don't know, 10 folks at a large company or medium-sized company. That's a very big market, very common. Folks are very successful there. Consultants, same kind of thing. They tend to be 1099 employees. So 1099 employees don't have the same benefits package that a W-2 employee would have. So again, they're drastically underinsured. And they're high income earning professionals, highly educated. They don't have manual labor as a part of their occupations. So great opportunities there as well. So I will stop there. We have a minute or two left to go. I'll see if there's any questions, but if there aren't any questions, again, I just want to say thank you to Regis. I want to say thank you to everyone who came. Really appreciate the opportunity to chat with you all today.
Sounds good. Looks like we have a question, Vin, down in the chat box.
Chat box. What about real estate investors? What about real estate investors? How do you respond to the argument that they have passive income coming in? That's an excellent question. So passive income actually hurts someone's ability, and this is with every carrier. Even if you go to like a specialty carrier like a Lloyd's or a Peterson, it doesn't matter across the board. It actually hurts the amount of disability coverage someone can get. So think about the purpose of disability insurance is there to replace someone's income that's no longer there because they can't work. Passive income, let's say I have $100,000 a year coming in rental income, whether I'm hurt or not, I'm probably still going to have that $100,000. A better example is dividend income, right? I have dividend income coming in from owning Apple stock, right? Whether I'm hurt or not, I'm still going to get that dividend income. So what happens is at point of application, an underwriter will reduce the amount of coverage that you can get, or they won't give you any coverage at all, depending on how much of your income is passive versus not passive income. So to answer your question more directly, that definitely is an issue as far as getting disability coverage. It depends. So let's say I make $1 million a year and 50,000 of that is passive income, then that's probably not going to be a problem. If I make $1 million a year and 800,000 of that million is passive income, you're probably not going to get any coverage at all. So it just depends on what the circumstances are and what the tax returns say. That's a complicated one, though. Great question.
Great question. Anybody else have any other questions before we wrap this up?
Is there a lot of life insurance policies have living benefits? Is there any crossover between disability and living benefits?
That's also a great question. Guardian just came out with a contract that does have some living benefits and does have a disability benefit. Mass Mutual does not have so when you say living benefits, I guess you could say going out on claim, you're still living and you're getting a benefit. I guess that's kind of a living benefit, right? But you have to be hurt or sick in order to get it. But
Exactly.
Guardian has a contract that I know. I think I have I think I know what you mean. Guardian has a contract that's on a whole life chassis. So it has a disability component to it, a long-term care component to it, a life insurance component to it, and there's cash value. So you can pull from the contract. The only problem is, and this is my personal opinion, not Regis's, not Mass Mutual's, my personal opinion is it doesn't do anything great. It's a Swiss Army knife. It does a lot of things, but it doesn't really do anything really great. But that's probably, in my experience, the only thing that's going to have what I think you're referring to as a living benefit, like cash value that you can pull from.
Yeah, or a life insurance policy where you can use the death benefit in your lifetime if you get injured.
Yep. Another great question. Thank you.
Interesting. Anybody else have any other questions before we wrap this up? All right. Finn, thanks so much for presenting that really helpful and really useful information. I think this was a great starting point for this two-part webinar series. I hope everybody now has a nice foundation of DI knowledge. Thanks again, everybody who participated today and who will be listening in the future. Please be sure to attend part 2 of this webinar series. It's next Thursday at 1 p.m. Eastern time. The material will build off today's discussion, so be sure to attend that. But I'll let everybody go. Thanks again, and everybody have a great day.
Thank you.